Hey, what's up, everybody? It is Wednesday, May 27th. That day off kind of threw me off a little bit. I thought it was Tuesday, but it's Wednesday. I have an announcement before I get into the market update. I'm doing a podcast. I want everybody to know that I'm going to be doing a weekly podcast. I actually recorded my first episode. I don't know where I'm going to upload it yet. I mean, I might upload it on my website. I might go to one of these podcast channels to host it, and then it'll go out on all the popular things, Apple, iTunes, Spotify, whatever. But just want to let you know, and I want to thank all of you, just as a side note, thank you for being subscribers to my channel. Over 5,000 subscribers now. And you know, what I talk about is a very niche thing. It's not, so to have over 5,000, I'm very appreciative of that. Thank you very much. And if you have not subscribed, please do so. But now there's going to be a weekly podcast. And the reason why I decided to do a podcast is because I have more time in a podcast to delve into the issues more deeply. You know, things like MMT, mental game, market trading strategy, policy, fiscal policy, monetary policy, all this stuff. So it'll give me more time. The podcast will be like an hour long. You'll be able to download it and listen to it. So, you know, I think should be fun, right? Should be fun. All right, let's have a rundown on the market. Another big update. Yesterday, I put out a video saying it might be late. I didn't say it might be too late. I said it might be late. And the reason I said that was, if you want to backtrack and rewind, back in late March, early April, when the market was really plunging and there was just rampant and understandable pessimism and worry and concern. You know, coronavirus was breaking out all over the place. We had surging cases here in New York. There were lockdowns, everything. And I said at that point, you got to buy into that market collapse. I said that because I felt the market, with such a violent correction, and in many ways it exceeded the 1929-1933 correction, you know, Great Depression era. It discounted the contraction in the economy, the negative impact of the economy. And I said at the time, new variables. I kept mentioning massive amounts of fiscal support, monetary support, and ultimately we would get to a point where the lockdowns would end. And we saw the big bounce back. I mean, the Dow hit 18,000. We're back at 25,000. The S&P, I don't remember how low it went. I believe it was 2,300. I could be mistaken on that. We're back over 3,000. So everything I forecast at that time was correct. And all along that rise, if you recall, and I've been pointing this out almost on a daily basis, there was still rampant pessimism and rampant negativity. I've been highlighting the weekly AAII, that's the American Association of Individual Investors, weekly sentiment survey has been highly bearish, very low levels of bulls, and that bull-bear spread, which is important to look at. I think that's a very good indicator. Negative for 13 weeks. That hasn't happened since 2008 during the Lehman crisis. So you had rampant negativity. Now what's happening is we're seeing a shift in the sentiment. Now, I don't base all my stuff on sentiment. For me, it's an interesting and sometimes important indicator, but we know, you know, there could be periods of time when sentiment can be elevated bullish for a lengthy period of time, and vice versa, sentiment can be bearish for a lengthy period of time, and we could have market declines, and vice versa. When it's very bullish sentiment, we could have market advances, extensions of rallies. I think that's probably what's happening right now. But as you know, the core of my analysis is MMT. I look at fiscal policy, and I was the first one to say, look, there has been a massive fiscal response, and that is the reason why you have to buy this market. To be honest, I'm still looking for evidence, and some people have called me out on this, saying, Mike, in 2009, it took 2, 3, 4, 5 months for the economic evidence to start to show positive, and I understand that, but I'm not looking at the typical, government released data that comes out, 30 days behind or sometimes even a quarter behind. Everything I do is from the daily Treasury statement, which is a precise, every single day update on spending flows, tax flows, and there's an enormous amount of leading information you could garner from that. That's what I pull from. I don't see, well, let me restate that. Today we got in the latest data a nice uptick in employment and withholding tax deposits. So, it's one of the things I'm looking at now. Let's see tax flows. If people are going back to work, if they're getting back on their jobs, you're going to see that employment and withholding tax data start to tick up. And it hasn't happened. Today we got a nice uptick. It was actually the biggest uptick in 8 days. Hopefully tomorrow we get the same thing. Now, I've been saying take some protection here. You have things like the put-call ratio, which now, if you look at the 10-day average of the put-call ratio, that is at a level which historically has signaled a sell signal in the market, short-term sell signal. The 20-day average of the put-call ratio is now almost down to a level where historically that has triggered a sell signal. But again, the longer term stuff like the AAII, and we're going to get that survey tonight, I'll have it out for my subscribers tomorrow, that's still showing way, behind in terms of shifting to a bullish stance. Now, just let me give you some perspective on that, because in January and February of this year, when the market topped out, that thing was super bullish. And I've been talking about this, like individual investors, they were neutral all last year. They jumped in super bullish in January and February, and what happened? That was the top of the market. And by the way, at the same time, again, I want to reiterate that it's not just that I'm looking at. I'm looking at fiscal flows, and at that time in January and February, you could go back and watch my videos from that time. I was saying, hey, you know what? Fiscal flows are slowing down. It's no good. We're losing the fiscal support. And it coincided with that peak in bullish sentiment for individual investors. And boom, the coronavirus hit and we crashed down. An interesting thing and kind of a funny thing I saw, and I clipped this out and I sent it out to my subscribers today. Jamie Dimon, of course, JP Morgan chairman, CEO. In April, he said, we are in for a long, deep recession. And today he said, the economy is going to recover quickly. So I think that's another little snapshot of how the sentiment has shifted. In early April, when you should have been buying, a guy like Jamie Dimon was saying, he was throwing the warning signs out there saying, we are in for a big, deep recession. And now I think when probably it's wise to take a little money off the table, he's saying it's going to be a quick recovery, everything is going to be great. So there you have it. Another thing, oil. Let me talk about oil, because this is important. And I'm kind of, we've been long oil. We got out at the last Wednesday on the EIA report. We're actually a little bit short, so we're catching this. Actually, one of my subscribers today said, Mike, I just doubled my money in options thanks to you from last week's oil report. Bravo to that guy. Another big build in crude oil inventories, another build in gasoline inventories, another huge build in distillate inventories. Where are the cuts? Where are the production cuts? And by the way, what does that say about the economy if now we had 2 weeks of modest drawdowns in crude, and now in this latest API report tonight, that erased both of those 2 weeks in almost a 9 million barrel build in inventories. Tomorrow, of course, we get the EIA. It's 1 day delayed. Tomorrow we get the EIA weekly petroleum status report. I put out a full deep analysis on that. If you want to get that, go to my website, sign up for a 30-day free trial of MMT Trader. All right, that's it for now, folks. Remember, I'm doing a podcast. I'll let you know where the first and the rest of the installments are going to show up as soon as I decide where to upload it. Stay safe. See you tomorrow. Bye-bye.